Good afternoon, everybody. So today is 26th of February, Wednesday, and it's 12 p.m. now. So we will start our 10th session for this series. So this is the final session of the series. So we hope to keep you engaged with us. And then for today, we have invited our trainer, Miss Binni. She's a SGX Academy speaker, and she has more than 15 years of trade and training experience. And for today, she'll be talking about Forex indices. And if there's time, also we'll be covering for gold and oil. So without further ado, let's hear from Binni what she has prepared for us and what's interesting in the market in the past few weeks. Yeah. So Binni, over to you.
Thanks a lot, Sahan. Hello, afternoon, everyone. Let me just share my screen. Okay. I think you should be able to see my screen as usual. Let's wait for more people to join the session. How are you? Have you had your lunch yet? There's a chat box that you can interact with me. You can ask me questions there or let me know if you do have any questions whenever I cover a pair. So before this, let me just go through the standard slides. Today would be the last session. I've done the session since last year. I think it's probably started in June or maybe July. Can't remember. But every month I'll be doing 2 sessions. And today will be the last one. If you do have any questions, you let me know at the chat box. I hope that I can cover them because I'm just going to end the session at 12:30 because I need to hurry to another session. All right. And first, let's go through the disclaimer. Whatever that's covered here, it's solely for educational purposes and should not be considered as a financial advice. And this is a disclaimer from my company. We do not provide financial advice or recommendation for any investment products. If you do have any questions, please refer to someone who is qualified to do that for you. And if you would like to contact me, which quite a couple of you guys actually contacted me on questions that you didn't manage to ask me in the session, then this is a place that you can reach out to me, either via this email here. So this is the email, or you can go to the YouTube, which is my YouTube. Best if you can just click the follow because I do cover a lot of movement because for myself I trade a lot and I trade basically I do basically the low hanging fruits, meaning that whatever that's move. So if you are in my community, you know that I've been talking about Hong Kong indexes, Hong Kong stocks since the start of January this year, right? In fact, that's only one thing I kept talking about, which would be the Hong Kong stocks, because that's where I think that low hanging fruits was flowing, was heading to. So if you do like to get updated, please do follow the channel. Otherwise, you can just leave a comment in my YouTube channel. I would be able to read them and reply to you. All right, so today, as usual, I'll be doing a little bit on market summary, indexes, Forex, Go, whichever I think is interesting or whichever your questions pop up. So if you do have questions, please ask me at the chat box. Leave your questions there. If you are interested to get a demo account in MT5 to trade, whether you want to do indexes or FX, then you can get a demo here. Okay, and if you do have any questions, you can contact PhillipCFD at this particular address here. All right, so let's get started. Okay, so I presume that you want me to talk about HSI because HSI has been something, which is the Hang Seng Index, has been something that I've been talking since last year. All right, since last year when it was doing this more like a retracement. So last year, just to quickly recap, this was my stand. It's an upward movement. So this was that extended retracement here. Okay, and of course that I've covered when it was here, and I called this as a retest. That means that there was a support level here, and this is a retest to that support level. Price had a moving average cross, and then it started to move up. All right. Now the question will always be, question. Do you think that the Hong Kong market is going to continue to go up? What do you think? Let's see whether I have enough time to cover this. If not, then I think that I might have to record a video for this, because I've actually covered and talked about this in my own community, why I think the Hong Kong market is probably going to continue to go up, all right? And it's not just a guess, it's with proofs, all right? And it has to do with money flow. That's why you have to know that FX trading, or knowing the FX, is really very, very important if you want to know intermarket, okay? But let me just talk about this particular indication here, which is the use of stochastic. Okay, now stochastic, right? It's an overbought and oversold indicator. Okay, what is the meaning of overbought and oversold, right? Now, when priced, or rather when a stochastic indicator it's above 80, which is more than 80, for example, now this is considered an overbought situation. OB, overbought, right? Overbought means that price is getting expensive relative to the previous measured range by this indicator called stochastic. Okay, so usually when price is in the overbought region, like what I've highlighted here, it means that price is probably toppish. Okay, so for example, right, let's take a look at here, right? It's above the 80, price is probably toppish and it works, right? And here it's above the 80, price is toppish and it did move down, okay? And here, all right, priced it's a little bit more like top above the 80, but it takes a while for it to move down. Okay, now my question is that right now we are seeing that this stochastic has been consistently above the 80. And why? Starting from the point that it gets to the 80 and above it, why it doesn't move down? Okay, hence the indication fail. Okay, now so what I wanted to do is, I mean, this is not the main thing about money flow, right? But just wanted to share with you how the whole idea of momentum is right now with Hang Seng Index. Okay, so I'm talking about momentum. Momentum essentially energy. Now, if you look at the structure or the construct of a stochastic indicator, it measures the current price, okay, relative to a previous period. That, for example, it measures the current price relative to the past 14 days. All right, and to measure if the current price, right, relative to the past 14 days, whether the current price is expensive or it's cheap. Okay, so let's say, for example, if the current price, right, for the past 14, if the price for the past 14 days, right, is trading at 100. Now, right now it's trading at 120. Is it expensive? Is the current price expensive or is it cheap? What do you think? Let me know in the chat box. So for example, right, if the current price is trading at 120, if the previous 14 days has always been trading at 100, then at 120, the current price is going to be expensive, okay? Now, let's say, for example, if the current price is 80, and then the previous 14 days ago, right, was 100, then the current price is actually cheap. Agree? Okay. Now, what happened is that, let's say, for example, if this entity is chicken, and there's bird flu, all right? And then and whenever you eat that chicken, you will get flu. Okay. And the price starts to drop 60, and it starts to drop 40, and it starts to drop 20. Now, at $20, do you think that this is cheap or this is expensive to the current price, to the previous 14 days price? If right now it's trading at 20. You probably might answer cheap, right? But then even if you buy at, let's say, 20, okay? Because whenever you eat this chicken, you get bird flu, right? Even at 20 might be considered expensive because whenever you eat the chicken, you get bird flu, okay? And people fear eating the chicken. So hence, it's actually dropped to 10, it could drop to 5, and even if it goes to 2, nobody wants to eat it. Okay, and hence, right, in this case, the value of the stochastic will always be low at the low region. Okay, let's say, for example, if this entity is chicken and you eat already, every chicken that you eat, right, you will reduce your age by 2 years old. That means you without doing anything, right, you get younger and younger. So the chicken is in high demand and it goes to 140 and it goes to 160. Sales just like doubled every day and it goes to 180, but sales will double every day, right? Now at 200, is the chicken considered cheap or expensive? You find it difficult to answer, right? Okay. But what would the stochastic be measuring? The stochastic would be measuring an overbought situation because it will always be at the top. Okay, always be at the top, right? It will be in an overbought situation. Okay, now when this happens, right, the stochastic would be like this because then there is actually an increase in price, but that price increase, right, in terms of the momentum, that means the rate of increase is at the extremely high level, extremely high level. Okay, and that this would result in what does it mean? It means that there is a very strong demand that every time, right, whenever price drop a little bit, people buy in. Whenever price drop a little bit, people buy in, right? And this creates such that with the formula of creating this stochastic, it creates such that the stochastic will always stay in the overbought region, okay? And always stay in the expensive region. Okay, so this is the reason why we are seeing the stochastic having this reaction here. Now, when you see consistently that stochastic, it's at the overbought region without it coming down, it only says one thing, okay? The momentum of this price movement is extremely high. Okay, all right. Now, so again, I'm not addressing whether from the money flow of point of view, whether it is going to go continue to go up, right? But what I thought would be interesting, let me just get my other chart to show you the Hang Seng Index proper. The one that we are seeing, okay, is a Hang Seng Index that's market make, meaning that it's offered by PhillipCapital, right? So this one as the Hang Seng Index in terms of the index itself, okay? So what happened is that if you take a look at the red line, so this was the first red line, right? So that was the Hang Seng Index in terms of the recent high. Okay, so this was that recent high, right? In fact, yesterday when I was doing my session, in fact, I'll do almost like everyday session with my clients, with my students, right? I was just telling them that on a week-to-week basis, that Hang Seng Index had a break above the previous high, all right, and then also a break above this particular high here. So this high and then this previous high, right? But the yesterday when it dropped, right, it dropped nicely to the previous high. Okay, so you can see that yesterday it dropped very nicely to the previous high and it's very much supported. Okay, so in other words, right, even when you see a rebound today, all right, it's not surprising to see that rebound. Okay, so all in all, what I'm trying to say is that the Hang Seng Index is very much supported. Okay, now if you were trading yesterday and you had realized that the support, right, given by the previous high by the Hang Seng Index, right, it's very strong, then yesterday would be a good place to buy in. Okay, so now the key question is, after you know that from the stochastic reading that it is really very strong, right, then what would be one indication to know that the momentum has wind down? That means that to know that the momentum is actually heading down, right? So it's when the stochastic hits below the 80. So far we know that the momentum has been staying very strong as long as it's above the 80. But as soon as you start to see that the stochastic indicator falls below 80, it means that the very strong momentum has actually ended. Now, doesn't mean that price is going to head down. What I'm just saying is that the very, very strong momentum, which is right now that you're seeing here, has ended. Okay, so it can imply that it's going to move up at a faster rate. But what is more important is to watch out for a price break above the previous high. Okay, so at this moment, if I just turn this into a 1 hour chart. So this is usually what I used to do to trade the Hang Seng Index. All right. As to look at the 1 hour chart in terms of the intraday movement, right? Then you know that we need to look out for a break of the previous high, which is for this market make index, right? It's about 23,700. Okay, do tally back with the index itself, but at this moment, based on this market make index, then the breakout of the price would be around 23,700, which is essentially, all right, a bit of the extreme high plus the cluster of this high here. So that would be the lookup point, meaning that if price can gather a little bit more momentum, all right, then to break out, then the strong momentum would continue. Okay. Otherwise, do look out for some form of a retracement along the high of the resistance level. That means the retracement, you can't allow price to go very deep down in retracement, because if it comes down very deep down in retracement, there's only one indication, is that the bulls aren't very strong. So if there should be any retracement, that means any correction in price, then it shouldn't be too deep down. Okay, you don't want it to go too deep down, because when it go too low, it just says that the bulls aren't that strong. Okay. All right, any question here? So this is the Hang Seng Index. Any question? No question. Let me just continue to gold. Okay. So gold was also something that I've covered quite extensively, and my thoughts on gold, right, was long when I covered last year. Okay. So when I covered last year, it was long and price moved up. Okay, price moved up very, very nicely. And right now, if you fall back, right, into what I've covered in stochastic, huh? So this was also, again, right, belonging to the very strong upwards momentum. See that? That's very strong upward momentum here. We see very little retracement. Okay, very, very little retracement, and then price goes up, very little retracement, price goes up, right? Okay, so that has been the movement of gold. Okay, but you can also look at the moving average, the moving average, right? It shows that gold is still very much in an uptrend. So this red one is 21, the blue one is 55 days moving average, and this two moving averages are really my preferred moving average, even for medium, for short-term trading. Okay, you can see how well that right now that price is reacting to this moving average. Now, what I want to point out is that if you take a look at the movement during this period of time where it was moving very, very strongly, each time, right, you look at the stochastic. Okay, it doesn't really move down below the AT. So this is the dotted gray line, right, is the AT line. It doesn't really move down below the AT, right? It doesn't. See, even around here, it got supported and it moved up. Okay, but what is being observed here, okay, is that we are seeing sign, okay, that it is actually heading down. That means it's opening up. That means the two moving averages, two stochastic lines, they are opening up and they're moving below the AT. Okay, so what this suggests, okay, is that the momentum that we have been seeing here, right, it's winding down. It's not that strong. Okay, and it doesn't mean that the downtrend is no more, because we see that this upward movement, right, given by the moving averages, and there's still very, very bullish, very much opening up, suggesting that the strength of the gold movement. But from the stochastic point of view, what this is suggesting is that there might be a deeper correction. That means that you might be expecting that gold would have a deeper correction than what we've seen in the past. Okay, in the past, maybe that every time it moves down by, let's say, less than $20, it will go up. It moves down less than $20, it will go up, right? But because of the indication from a stochastic, it might be that that the momentum is winding down. It might not say that, okay, after it moved down by $20, it will bounce up. It could be it has to move down by $40, it has to move down by $60. So the downward correction would be a little bit more extensive than what we've seen in the past. Okay, so that's the implication here. So what you need to know, all right, or what you need to do is you need to be able to find possible potential way of noting a possible support area. Okay, so there are a few ways that we can do. One is to take note of the historical support or resistance level. For example, this was the all-time high or previous all-time high of gold. Okay, and of course that this level will be well noted by many people because they know that this was the all-time high by gold, the previous all-time high, and price didn't manage to close above, but finally around this place here, price actually closed above, right? So it could be this case that if it's going to drop down, then it will be a previous resistance. So this was a resistance, it gets supported. All right, so that would be possible scenario. Okay, so the other scenario is to take note of this level here, all right, a deeper correction level, right, and this will coincide with a moving average support as well as the previous support and resistance here, right? But in any case that if you look at the conclusion that I'm drawing with the stochastic, it means that it might have a deeper correction. Okay, so all in all, what I usually like to do is to look at the reaction of price when it hits into a particular support level. Okay, so where can we get a software to trace the movement of HSI, etc.? That means that you're talking about HSI index, right? Not this one. Are you talking about this one here, which is not the HSI index, but it's more like a market make index, huh? Offered by PhillipCapital, or you want to get the proper HSI index, which is the index that's offered by the Hong Kong Exchange. Now, this one here is a MT5, Meta Trader 5. So later, I think that Zehan or the staff can just put in the link to download the demo account so that they can point to you where you can download the demo account for the MetaTrader. Okay, so this is a free software which is called MetaTrader, and then if you are trading with Phillip, then they are using this particular software. Okay, so that's Hang Seng. All right, the next one I've covered is gold. All right, would you be interested to cover a little bit about the US indexes? If yes, let me just go through this one here, which is NASDAQ. I think NASDAQ, it's getting a little bit more interesting because then we have NVIDIA, all right, doing the earnings, and as well as we've seen that a lot of M7 stocks, right, hasn't been moving very well, especially recently Tesla dropped quite a lot. Okay, I can only say that Tesla dropping, it's not something that's surprising. Okay, so but we do see, for example, Meta correcting, the NVIDIA not really moving, it's flat. Probably the only M7 that's a little bit stronger is Apple. Okay, so this is the current situation of NASDAQ. Again, this is the market make index, all right? But what we are seeing is a potential of a double top. So this was the first resistance, and then this is the second resistance. So I call this R1 and R2. What it's showing to me, it would be dangerous. Okay, would be if the moving averages cross down, right? Like something like that, cross down, right? That means the red color cross down the blue. Okay, but bear in mind, bear in mind that when the red color cross down the blue, the moving averages are usually lagging. Lagging means that it's usually slow. All right, slower than the actual price movement, because only when the price moved, it will result in the movement of the moving averages. Okay, so in other words, right, if you see a cross here, that means the red color, right, cross below the blue, then it also means that price would have already moved down quite substantially already. But this is a very good indication if the moving averages does have a bearish cross. That means the red color crossed below the blue. Now, when this happens, it says that number one, the potential pattern that we are seeing here, which is a double top, okay, a double top, right? It's gonna be broken. Okay, so what is the meaning of the double top? The double top means that it is a reversal pattern. Okay, it's confirmed that the uptrend that we are seeing here, all right, is likely to show a reversal, okay, upon the completion of this double top here. That means that the double top is a like a confirmation to say that this upward movement, the upward trend, right, has ended. Okay, so very important. What you need to do is you need to look up for the support level right now, and the support level based on this price feed happens to be a previous all-time high. Okay, now if price is to break below here, break below the horizontal level, which is 20,500 based on this data, it means that the double top will confirm. It also means that those people who buy, all right, on the break of the all-time high here, that means the all-time high essentially was the resistance, and then they buy when price break above the resistance, and it goes back down. It means that the whole chunk of people who bought here will be at a loss if price is to move below. Okay, so this is a strategy that I've designed, which is called wash and rinse. You can just Google wash and rinse and then learn about the basic of this strategy for free, and it's really very powerful because I basically use wash and rinse for almost all my trading instruments. I don't use any other method, but just really the wash and rinse. Okay, so in this case, do look out for NASDAQ, okay, breaking below 20,500. It would really be very bearish if this happened. Okay, so in other words, right, what we might be seeing, okay, is that we might be seeing a correction in the US indexes, and we might be seeing a recovery in the Hong Kong or the Chinese indexes, but it's all pending. All right, what is needed? It's all pending a breakout. That means a breakout means that for price to trade higher, just like it's very near, right? So it could just happen very soon, or for price to travel so much lower. All right, and I know that it seems far, but it can really happen quite soon if it does move. Okay. Any effect of correction of US indexes on gold? You see, for traditionally for US indexes, if it's correct, then probably money might be some money, I won't say all money, might be heading into a safer haven. Okay. But the safer haven used to be gold. It might not be the case anymore. Okay, because if you take a look at gold, right, gold doesn't have interest, meaning that it doesn't have a if you hold gold, you don't really get anything. Okay, it's just basically a piece of gold lock for waiting for appreciation. Okay, so in this case, there must be a very strong driver for people to endorse gold. Okay, so my personal thought is that with the fact that gold has already gone up so much, and the fact that gold doesn't return anything, probably it's still more worth it to put the money into the stocks. At least you do potentially might get appreciation. You might also have dividend. Okay. So it's all about putting let's say the money that one has taken profit from the US indexes, and then to put it into a market that's basically have been trading at the low side. Okay, so you think about which market has been trading at the low side, and you probably can link that to why recently the Hong Kong market's been moving very well. Okay, all right, any other question? Okay, so what I've covered today is mainly on the key levels to watch out for. All right, for major reversal, for example, for Nasdaq, based on this price fit, it will be 20,500. All right, and then for gold, all right, to also look out for potential support areas underneath should the stochastic continue to show a bearish momentum, or rather maybe a weakening momentum. All right, and then to look out for HSI breaking above the support level, resistance level, because right now it's at the resistance level. And the question is how much upward potential for Hong Kong market. I think I would be able to answer you this one, but it's more like my guess. Okay. What I did for my own community is I answered at the point as I gave them a marker, all right, on how to spot that smart money is not flowing in anymore. Okay. I probably might have a chance to cover this in my YouTube because now it's a bit like late already. Or if there's any chance to speak to you, then I probably just cover this on how to decide when money is flowing out of the Hong Kong market. Then roughly we should know when it's going to end. Okay, thanks a lot. I'll just pass the session back to Zihan. Thanks a lot.
Yes, thank you, Binni, for the interesting session. So I'll do a quick update on our campaign. This campaign is for the period from, okay, let me see, let me expand the slide. Okay, so I think my slides are showing. Okay, so this campaign is from now until 31st March. And if you have not started CFD trading with us, you can participate for this campaign and receive up to $500 in cash credit. So this is the mechanism. So all you need to do is apply for your CFD account and then do your first CFD trade. And then you will receive the first $100 cash credit. And then every subsequent CFD trade after will earn you $10 cash credit, up to $400 for the entire campaign period. So if you fulfill all criteria of the campaign, you will receive up to $500 cash credit in total. So there's a QR code on the screen. You can scan the QR code and participate. I will show this screen again later. Let me move on to the next slide first. So what it will be happening for this week, some interesting event. Firstly, for today, later today, after US market close, we have NVIDIA reporting earnings. This is probably one of the most watched earning events for this season. So as we know, the Max 7, the AI thematic stocks have been on a roller coaster ride. So markets are very keen to see what Jensen Huang from NVIDIA will have to say to address the challenges and threat from DeepSeek. Right? And for tomorrow, we have the US initial jobless claim. Market expectation 220,000 versus last week's figure of 219. And on Friday, to wrap up the week, there's also the US PCE data. Data that the US Federal Reserve will be watching out for. So market are expecting a core PCE to be in the range of 2.5 to 2.8 year on year versus 2.6 for the previous report. So slightly uptrend in inflation. So this is the current market expectation. And next week, next Friday, we have the US non-farm payroll and also the US unemployment rate. Both data are expected to remain unchanged from figures in January at 143,000 for non-farm payroll and 4.4% for unemployment rate. So some interesting event this week and next week, possibly market moving. So do keep a lookout. And if you find this series or our webinars interesting, do join us again for our other educational events. So we have, so all you need to do is visit points.com.sg, click on education, events and seminar, and over there you'll be able to find our event schedule. Most of the seminars and webinars are free to join, so do check out the calendar. And so, and that's all for this session. We hope you find this series interesting and engaging. So thank you, Binni, as well for your participation and help with reaching out with our clients. So we hope to see all of you again for our other events. So thank you and have a good rest of the week.